Hello, this is Joe Scorese, founder of the Creative Bird Strategies podcast. Welcome. Also, nationwide direct private lender, and you could find us on Apple and Spotify, and also just check us out on our website, creativebirdstrategies.com. And we have another great interview this morning with a mutual colleague of mine. He's friends with a close sponsor and friend of ours, Linda Pelagas of Realty 411. Michael Poggi, published author, national speaker, real estate and alternative investment spearhead, founder of the Millionaires Group. He's an industry leading authority in alternative wealth building strategies. Michael is nationally recognized as a public speaker and professional investor, developer, and author. Michael also speaks on how to buy real estate and invest in many other venues using your IRA or old 401k plan money through the power of self-directing. In fact, he shows people how to transform IRAs and 401ks into completely self-managing money-making machines, creating cash flow monthly and tax-free. He also runs a private equity group that funds projects all over the world. In addition, Mr. Poggi is president and founder of the Millionaires Investment Club based out of Fort Lauderdale, Florida. Michael, good morning. How are you? Thanks for coming on to the Creative Bird Strategies podcast.
Thank you, Joe. I appreciate you having me. I'm honored.
So we've had some great conversations. I'm a little jealous that you're down in Fort Lauderdale, Florida. I'm in here in sunny Philadelphia. So how did things just get started, becoming an expert in your space? Like, where did it start? Where did it gravitate to? And, where do you feel that you're at now with your business?
Yeah, as a young man, I lived south of Chicago. I'm sure you could tell from my accent that, us Italians hang around Chicago as often as we can. But anyway, I started in the south suburbs of Chicago, and I ended up getting a job downtown working as a stockbroker as a very young man. And I got to learn from, not only of my mentors that, investing is the way to get ahead instead of working for a living. But the problem was that I saw many, many, many clients, including my own clients, that either didn't make money in stocks and mutual funds or annuities, made very little money or lost money. So although I became very successful as a stockbroker and I ended up owning my own stock brokerage firm downtown Chicago, I noticed that even my own portfolio wasn't doing as well as I'd like to. So I saw from, learning from my investors that they had most of their money in real estate. So for example, if they had a $10 million net worth, they would allow us to use 500,000 of that for stocks, and the other 9.5 million was in vacant land and new construction and fix and flips and rental properties. So I said, my goodness, why is it that all my clients have 90% of their money in real estate instead? And as I got to learn more, I realized that they can leverage real estate. So for example, if they have $100,000 and they were going to make a choice of what to do with it, they can put it into a mutual fund for 100 grand, dollar for dollar, or they could put it into a $400,000 house by putting $100,000 down payment. So they were able to control 400 grand with just 100 grand. As I got to learn about leverage, then I learned that a lot of the wealthiest people are using tax-free vehicles to get ahead. For example, they're using a real estate IRA, like a real estate Roth IRA. So the real name is a self-directed IRA. And I learned that my clients were investing in real estate and generating profits from the sale of a property or profits from income, rental income, or lending money, all from a self-directed IRA. So when I learned that, I moved my IRA out of Schwab, out of Fidelity, out of a bank, and I moved it into a self-directed IRA, and I made it a Roth so that it's tax-free. And I started to invest in real estate myself. And all of a sudden, my life got easier and better because I had passive income. I had properties going up in value. And sure enough, I was able to beat my stock portfolio money myself. So I ended up liquidating all my stocks, all my mutual funds, and I sold my stock brokerage firm for millions and moved to Florida and put everything that I had into different real estate strategies, meaning, building houses, flipping apartment buildings, and buying small shopping centers, things like that. But one of my biggest successes, Joe, was from quarter acre buildable vacant lots in fast growing resort communities. And that one took off like crazy because I was able to buy lots very cheap, hold on to them for a reasonable amount of time and then sell them on terms and create massive cash flow, all tax free.
So, obviously you're in the vacant lot investing space and you've found a passion for it.
Yes.
Let's talk about some of the benefits versus other asset classes. Like
Yeah.
what would be an investor that I want to get into land. What are some of these benefits versus other asset classes that separate, land acquisition or land opportunities versus single family through four family or multifamily for that matter?
Yeah, great question, Joe. Well, for me, I like to have freedom of my time and low headaches and low stress. So vacant lots provide that for me as a strategy. Here's why. With vacant lots, I don't have anything to do but sell them on terms later on down the road and collect a monthly check, a monthly passive income. So that means that there's no repairs, no maintenance, nothing to do, not even mowing the lawn, because all of the lots that I buy are all wooded with trees on them. And I learned very early that I don't want to spend money on a lot that has grass that I got to spend $70 every 2 weeks, or maybe has high taxes like in Florida. So I don't invest in Florida at all anymore. And I did make a lot of money from investing in Florida. But what I wanted was lower maintenance, meaning nothing to do. So what I would do is I would buy a lot for 10 or 15 grand. I would hold it for 5 years until it doubled. So let's say it doubled in 5 years. Now I've got about a 20% return per year, approximately. And that was attractive because I couldn't get that in mutual funds. I couldn't get that in the stock market unless I was very lucky. And so by owning vacant lots, I had almost no downside. I don't think I've ever had a vacant lot go down in value. Either it stayed the same, like during COVID, or it went up because builders are building like crazy in the subdivisions that I go into. So I only focus on really, really fast growing resort communities that have lakes and golf courses. So the easy part of this is headache free, because vacant lots are simple. I don't have to deal with a general contractor. I don't have to deal with any maintenance. I don't have to deal with any tenants. So when you sell a vacant lot on terms, essentially you're becoming the bank, right? So if you're becoming the bank and you're collecting $300 a month or $400 a month from a buyer at 10% interest, not only did I make the profit from selling the lot at a profit of almost a double, but also 10% per year more. And even just the 10% per year more beats most stock and mutual fund portfolios. So very exciting.
So what locations do you target and why are they ideal for this strategy?
I started off practicing 25 years ago in Florida, and those were not resort properties. Those were just regular lots in regular subdivisions where the taxes were higher. You had to mow the lawn. So I started to switch to resort properties that were wooded. So first thing I did was I tried out an area in Texas a long time ago called Lago Vista, Texas, near Austin. And I was buying lots in there years ago for $9,000 or $10,000. And of course, they had paved roads, they had utilities, they had about 10% of the subdivision was built out. Well, I held those lots for about 5 years and they doubled. So I was selling them at 18,000, 19,000, and 20,000. So I made 100% return. But I sold them all on terms, meaning that every single lot, hundreds of them, I sold for zero down payment, 100% financing, no credit check, everyone approved. And I did that from my self-directed Roth IRA, which means that I was able to collect all that income on my profit and my interest completely tax-free, which means I got to reinvest all the money that I did not pay in taxes. That was so significant that it excelled my portfolio exponentially faster. I mean, I got up into the millions very quickly within a 5 or 6 year period just because I wasn't doing it in my name or my LLC. So then I switched to a different subdivision after those lots went over 20,000. By the way, now today, those lots are in the $65,000 range. So that's where I feel like I made my biggest mistake, Joe, was that if I would have held those lots that I sold at 20, here it is now 10 years later, and now they're worth $65,000 to $75,000. I missed $4 to $5 million of profit by selling them too soon. So that was one of my biggest learning lessons as a kind of a newer land investor. So I became real successful at just holding them longer term and letting them keep going up higher. And that's where my portfolio now is unbelievable because of not selling them too soon.
Yeah, and the same thing relevant to real estate. I mean, there was a lot of properties that I saw that weren't maturing as quick. And if I
Mhm.
just waited 5 or 10 more years as the market matured around it, I might have doubled or tripled my profitability. But you know, if we stay in the land of regret, we will eat
Of
ourselves to
course.
death. So you're obviously doing very well with what you're doing now. You've learned, obviously. I don't say that. I don't want to call them mistakes. You've learned them.
Yeah.
You've learned from your moves. You
Yes.
look at it from that way. So how does your team source and evaluate specific land parcels?
Yeah. So they have to meet my criteria. And my criteria now at my age is very specific, very strict. So I only have my team search for lots in resort communities that are where there's only about 10% of the houses are built out in there. That's the first priority. It has to be 10% or less built. Because what happens if we buy lots in a subdivision when it's 80 or 90% built out? Well, now the lots might be, 100 grand. And I don't want to buy too late or at the very end of a cycle. I want to buy at the beginning. So we source lots that are in a resort that are under $20,000 so that they're cheap for me to buy. And then when I go to sell them at double, they're still cheap. Because if I buy a lot at 100 grand and then wait 5 years and try to sell it at 200 grand, it's very difficult to find lots of buyers at 200 grand. But if I buy a lot at 10 and try to sell it at 20, it's still the same percentage gain, but it's easier to sell lots cheaper because more people have money to buy a lot at 20, which is still 100% return for me. So the third thing we do is we make sure that the neighborhood has more than one lake and more than one golf course. So the subdivisions that I invest in now have lots of lakes and lots of golf courses and tons of amenities. So that means that my future buyer could actually just buy the lot to use the amenities, and they don't really care to build a house necessarily right now. So the people that buy lots from me are typically buying them for investment purposes, to replace mutual funds, to replace stocks, and then also to get the appreciation and use the amenities. Then the third thing we do is we look for locations with low taxes, where I'm only paying $60 a year for taxes on my vacant lots. Low maintenance fees. So you always want to have lots that have a maintenance fee, because if not, then the roads get bad and the grass grows up in the ditch and garbage gets dumped there. So we only focus on communities that do have a property owners association fee, and that's called a POA fee. In this case, the fees that I pay in the subdivision that I invest in are only $16 a month. So again, low taxes, low POA fees, and also low cost of living and lots of growth, meaning that there's lots of permits being pulled. That's something that my research department is very diligent on checking to make sure with planning and zoning. Are there permits getting pulled for houses? Are there permits getting pulled for apartments? Are there permits getting pulled to widen the roads for schools, Walmarts, shopping centers, etc.? And if there is, that tells me that I've got a chance of making a great return in my lifetime, rather than buying in something where it's too remote, where there's no internet yet, or there's no houses yet, there's no roads yet. In that case, I might make money when I'm long gone, meaning my great grandkids, and I don't want that. So my criteria now is so strict and so narrow that I've narrowed it down to a science, where if I can buy lots in communities that are up and coming with only 10% of the houses built, when the houses finally get built all around my vacant lot, they go way up in value, 80,000, 90,000, 100,000, just by waiting my turn. And there's nothing to do, meaning completely passive. So I can travel, go around the world, spend time with my wife and kids, and not have to worry about anything, and let my investments do their thing. Very exciting.
So let's dive into the typical process and timeline for the purchase to the sale for the investors. And also, let's talk about returns on the investment that have generated for yourself in the past and present, combined on those questions.
Sure. So let me answer the second question first. Typically, our vacant lots that we're buying in fast-growing resorts usually average about 20% return a year. Now, of course, that's not guaranteed. It could be more, it could be less. But if I was going to place a bet on buying mutual funds or stocks and holding those for 5, 10, or 20 years, compared to buying vacant lots and holding those for 5, 10, or 20 years. Vacant lots, in my mind, are much safer, more stable, and plus have a higher upside potential. So if I can double my money in 5 years or triple it in 10 years, I'm happy. I'm very happy. So for me, my goal is to average at least 20% a year from no headaches, meaning no tenants, no aggravation, no nothing. And then when I sell them, if I sell them on terms and become the bank in my Roth IRA, I create another 10% income more per year from those vacant lots. So I get paid twice. I get paid for the profit of my own lot, and I get paid for the interest by selling them on terms. The second question you asked was, what is the process for us to buy vacant lots? So all I do is I help my investors and my family and my friends to buy vacant lots every day. And all we're doing is using our same system, which is we send out thousands of offers every month to a subdivision to buy vacant lots in there. Maybe 6,000 offers or 7,000 offers every month. So we're spending $5,000 or $6,000 a month just to get offers into someone's mailbox. Now remember, the sellers of those lots don't live in that neighborhood. They live all around the United States. So when they get an offer from me, it says, hey, my company name, I would like to buy your vacant lot, and I'm trying to make offers just below market value, so I actually get some people to say yes. Once we do that, let's say I make 6,000 offers, I might get 60 yeses back. So let's say 60 people reply to the letter, and they say, yes, I'll sell you my lot. So then that's when the rest of my team kicks in gear, and they have to do many things to make sure that the lot meets my criteria. For example, it has to be a good buildable lot. It can't be a lot where it's got a big ravine running through it, or it's too steep to build on, or it's got big boulders blocking the entrance. It has to be a good buildable lot. It has to have no liens on the property. So I've got one teammate that is looking at the lots, that actually lives in the subdivision, that walks the lots for me. I have one teammate on my team that makes the offers. I have one teammate that negotiates with all the sellers. So we're negotiating with 60 to 80 sellers a month, discussing their sale price. And then once that we agree and we know the lot is not too small, if the lot is at least a quarter acre, then it fits my criteria. If it's only an eighth of an acre, then we don't buy that lot. We pass on it, and we end up not taking it into inventory. So let's assume that we find out that the lot is good, it's a quarter acre, it's buildable, it's got no liens on it, and we walk the property and it's a good buildable lot that we would be happy with for the rest of our life, then we end up closing on those lots. And as we're closing on them, they're going into our holding account, and they're going back out immediately to investors that ask for my help. So maybe an investor says, Mike, I've got 16 grand only. Great. That's what the lots are selling for right now, between $16,000 and $20,000. So the entry level of this type of real estate is very low. Whereas, if you're trying to invest in a house or, a duplex, you're going to have to come up with, 50 grand or 100 grand or 200 grand. So in this case, the cost to entry is so low. So then the investors that are next in line on the waiting list, they get the next lots that come in. So if I get 60 lots come in this month, and one person's getting 1, another investor's getting 5, another investor's getting 12, we fill those orders on a first come, first served basis, where the lots that come in, once they're inspected and they pass all my criteria, then they go out just like they normally would into people's accounts that have agreed to go ahead and take them. So we actually help builders. We're supplying lots for builders that are building in this subdivision. We're supplying lots to investors, and we're supplying lots to my students and also my family and friends. So that keeps us very busy here doing big volume. And it's exciting because it's such a turnkey machine now that it's easy to duplicate and do big numbers and big volume by helping lots of people. It makes me feel good, Joe, because a lot of people don't know how to do all this. A lot of people don't know they can use their IRA or 401k plan to buy real estate. So by educating people, like you said earlier, you like to educate, and I really appreciate that. We educate people on how to get out of their stocks, out of their mutual funds, and use that money to invest in real estate at a low cost to entry without having to worry about, coming up with 500 grand for an apartment building. So we help any level, but a lot of people that have substantial money will put 30% of their money into vacant lots and diversify the rest into other holdings, other strategies. So we help a lot of people to park money in land so that they can have something later. Maybe down the road they might sell them at a profit, or they might end up giving them to their kids, as an inheritance, something like that.
So you obviously have some target markets that you find ideal. Let's talk about the investment strategy in these target markets. Let's talk about, what specific areas within these target markets, and how do you ensure that you are actually buying below market value?
Yeah, well, obviously for comps, we can tell from the comps, if the lots are selling between 15 and 20,000 retail, or even 15 to 25,000, we'll make offers slightly below that. If we make offers too low, Joe, then we don't get any yeses back. So I've tried that. I've wasted, $5,000 or $6,000 by sending out a mailer and offering too low, hoping I would be smart, and instead I get one or two trickle in. So I don't want to spend all that money to get maybe one lot say yes because I offered too low. I would rather pay them even retail right now. Here's why. If I buy lots at retail, Joe, and I just wait 10 years or 5 years or 20 years, just like my mutual funds did, or just like my stocks, or just like my annuities, I just hold them. And if I wait 10, 20 years, they should be much higher by that time. And especially when they typically go up more than regular stocks or mutual funds in general. So as far as, which neighborhoods, again, I have a company that does research for me to find me lots that meet my criteria. There's not that many subdivisions in the United States that are below 20 grand, that have very low taxes, that have low POA fees, that are buildable, that have streets and utilities and stop signs and telephone poles and schools and banks and restaurants and churches. That has to be all in place. So when we identify a subdivision like that, that's below 20 grand, we'll stay in there for years, and we'll accumulate and accumulate and accumulate. Even if I buy only one lot a year for myself, that's better than not doing anything at all.
So let's talk about some locations. I know you clarified some in some of the notes that we put together. Where would you suggest in where this 20,000 mark? I mean, I have some opinions on some markets. They might not be the same, but where are
Yes.
you focusing on behalf of yourself and your clients right now?
Yeah, right now we're focusing on a subdivision called Bella Vista. It's in
Mhm.
Arkansas, and it's right next to Walmart's big giant headquarters. So when I was looking at this subdivision many years ago, the lots were at $2,000. And now I still own many of those in my own IRA and in my LLC. And now they're worth, like I said, between 15 and 25,000. So by me keeping those and not selling those lots, I've been able to make way bigger returns percentage than my stocks or mutual funds. So Bella Vista, Arkansas is a massive subdivision. Joe, it's like the size of Fort Lauderdale. I mean, where you're talking about 65 square miles. So in that subdivision, it's so big that it holds 8 big lakes. I mean, big lakes where you can jet ski, water ski, race, or whatever, and then 7 golf courses. So when someone goes to buy my lots that I've been holding all these years, and they ask me from the advertisement, hey, does your subdivision have lakes or golf courses? I'm like, yeah, more than one, as a matter of fact. That's a big selling tool. And then it has 5 tennis courts, 5 swimming pools and 12 tennis courts, and tons of biking trails, tons of nature trails, and it's in the Ozark Mountains. So it's a beautiful vacation resort area. So that area, I will stay in there until I can't buy them below 20,000 anymore. Once that we hit that mark where I can't get any more yeses back below 20,000, then I will stay only as a holder of those lots in there for long term. And then I'll move to a different subdivision where I can start buying lots again at 10 or 12 or 15,000 again, and just build my portfolio up from another subdivision. But right now, that subdivision is so hot in Bella Vista, Arkansas, that everyone is fighting over the lots. I'm getting offers every day from builders saying, I need your lot. I want to build a house on your lot. Please sell me your lot. So I'm getting offers from investors and builders nonstop. I have a stack of them. It's amazing.
So, we're going to age ourselves, but I remember the advertising 15, 20 years ago by Eric Estrada from formerly of Chips. He was pushing that whole agenda back then.
Yeah.
So obviously the markets have shifted up and down. How are you highlighting I mean, it doesn't seem like you have to do a heavy marketing where you have already inbound developers trying to identify lots for themselves to build on because they got to keep moving to the next deal.
Yeah.
Are you collaborating with them in the development and then identifying buyers out of state, in state? And like, where does the
I'm
expertise
not
come
dealing
in
with
to
any, I'm not dealing
evaluate
with,
the returns for the investors?
yeah, you're right. But I'm not actually helping the builders build their houses. I'm just providing a service for them, and
Yeah.
we make a small fee of $1,000 per lot. So we don't make a big profit. We make a small profit for helping 60 to 100 lots a month, and maybe one builder asks for 5 lots. They build the houses, they buy the lots from me. They end up making all the profit from building the houses there.
So what do you, it sounds like you're very passionate about this. I mean, I really feel the passion through our discussion here. What do you enjoy most about helping investors succeed through these type of programs in Arkansas and Texas? And, you know, where's the big play on this for yourself and for the clients that you're working with right now?
Well, you and I both are very successful. We have a lot of money, and because of our efforts and our hard work, I would love it to be able to help again thousands of people a year to be financially free, to have passive income, and eventually fire their boss and not have to work anymore, or be able to have enough money saved up so that when they pass away, they're passing on a legacy to their family. So for me, my goal is to pass on all of my real estate to my children when I pass. And so I don't need to sell my lots. I can hold my lots even if they're triple, quadruple, doesn't matter. So my main goal is to help people just like me who are looking to get out of stocks, out of mutual funds or annuities or bonds, and get it into real estate at a low cost to entry. And if they want to do it tax free, we can help them with that. If they would rather do it in their name or their LLC, no problem. Either way, when I help people with this, it makes me feel good because I remember people like you, Joe, that gave me a break when I was younger and gave me some tips and taught me some things that if I didn't know them, I would not be where I'm at today. So I'm very grateful for my mentors, 20, 30 years ago. And now I have the ability to share my secrets and my strategies with other people. And when I see other people win, it just, fills my heart with joy because I hate it. I hate when I see people working until they're 60 or 70 years old and not being able to retire because they're stuck. They're stuck working because they made wrong choices. They're stuck in mutual funds that either never went up or are break even or down. And you can't go back 20 years ago and say, oh, I should have picked different mutual funds, or I should have picked different stocks, or I should have invested in real estate, even worse. So by helping people to get into real estate right now, I'm doing them a big favor. And by teaching them, how to buy them, how to hold them, how to sell them on terms, how to make land cash flow, just like a duplex, then, oh my gosh, it changes people's lives. So I've helped over 5,000 people to get to this point where many of them have changed their life. They traveled, they were able to quit their job, and now they have massive passive income and profits from simply quarter-acre buildable lots.
So what sets your program apart from any other real estate investment opportunities that are out there, especially in the land acquisition space?
Well, most land programs are not done for you like mine. Mine is done for you where we handle everything. We're the ones that send out all the offers. We're the ones that inspect the lots. We have someone we pay on the ground to walk them. We're the ones that negotiate with the sellers. We're the ones that do lien searches. We're the ones that prepare all the contracts to buy the lots from the seller. So there's no program out there that I have ever found like mine that is turnkey done for you. All I see is other people selling a course on how to be a land flipper or how to be a land buyer. And most people that I talk to don't want a course. They want someone to do it for them, and they don't mind giving them a small fee to do that. So by talking to all my investors over all these years and giving them all this education, they're excited. But what they say to me is, Mike, that's great, but I don't want to learn how to do all this. I don't want to go make offers. I'm a dentist. I'm a doctor. I'm a business person, whatever. People do not want to do the work themselves. They want to hire someone like an expert like myself that can find the lots for them, get them into their IRA, get them into their old 401k plan, or get them into their LLC, and then they can be done with it. They can go back to doing what they're good at. Because remember, not everyone's good at finding good real estate deals. It is an art, and you know that from your experience you're an expert at it as well, so you can understand where I'm coming from.
So how can we reach you and get a complimentary private consultation with you so we can see more information?
Thanks, Joe. First off, I have a book on Amazon. It's a top seller called Build Wealth Tax Free. And the reason why that's important is because the first chapter talks about IRA secrets, meaning how do you use your IRA to buy real estate? How do you get a real estate Roth IRA? How do you get money into your IRA more than just $6,500 a year? Because I think you and I both know that most people are discouraged by an IRA because they think they can only contribute $6,500 a year. In my case, I borrow money from sellers of land and make them payments to buy more land or a duplex or a house, anything. So I can teach people how to do all those real estate strategies by using a self-directed IRA. That's in my first chapter. The second chapter of my book talks about all of my trials and tribulations starting in the land business and then finally getting it perfected. And now it's an absolute turnkey money-making machine. So if people want to reach me, there's a couple things I have to offer. One is a webinar every Thursday evening at 7 p.m. Eastern time that you can hop on. And if you send me an email or a text, I can get you on the mailing list so that you can actually get on there and be invited to a webinar to see exactly how I buy them, where I buy them, what the lots look like, and everything about the neighborhood and why it's such a successful territory. So a couple of things, if you can probably even add it into the chat or add it after the end of this podcast. But you can use my calendar to get on my calendar, which is www.meetwithmichaelpoggi.com. So that's meet with MICHAEL and then POGGI, Poggi, meetwithmichaelpoggi.com. The second way to reach me is go ahead and text me. I mean, I'm an open book. I'm here to help people. So you can use my cell phone number to text me, and I would then be able to send you an invitation to the webinar that will teach you about the specific vacant lots. And my phone number, cell phone, that you can use to text me on is 954-258-6954. And if you would, please let me know in the text that you found this podcast phone number of mine from Joe so they know who it is. Very simple.
Michael, I want to thank you. I look forward to meeting you in person. Hopefully you'll be here at the Philadelphia Creative Birth Strategies Realty 4-in-1 event in April on the 13th.
Yep.
I think you'd be a great add because, it's another type of asset acquisition that it can build massive passive wealth and generational wealth as well. I want to thank you very much for coming onto the Creative Birth Strategies podcast. We're going to get this out onto Apple and Spotify. And I really thank you for your time on the weekend. And I look forward to meeting in person in the immediate future.
Thank you, my friend. I really, like I said before, I really appreciate you allowing me to do this. Thank you guys so much. So anyone that needs help, please reach out to me and I'll get you on the right track. We'll do a consultation for free. We'll look at your portfolio and see what funds you have available. Like I said, it's a cheap cost to entry. We're talking 16 to 20,000 to buy a vacant lot. So whether you only want 1 or 20 or 100 doesn't matter. We can help you at any level. We're very generous and very helpful. Thank you, Joe.
Thank you, Michael. And have a great day. Thank you, everybody. We'll see you soon again at the Creative Birth Strategies podcast. Have a great day.
Thank you.